YieldMax ULTY's dividend tax-free, tax now, or tax later? Today, I'll show you exactly how it works with a simple flowchart and a clean example. In this video, you'll finally see how ROC versus income really hits your taxes, your basis, and your future gains. I'll also share my live portfolio update so you can see the numbers in real time.
Here we go.
Welcome back, dividend stackers. If you're new here, I track one ETF, and that's ULTY, the wins, the losses, the drip every single week. And a quick reminder, none of this is financial advice. This is just what I am doing with my money inside of ULTY. Now, let's jump in. So ROC versus income, what gets taxed and when? ULTY pays distributions that can be classified as income or return on capital, also called ROC. The classification determines when you pay tax, not whether you receive cash. Here's a rule of thumb: income is taxed in the year you receive it. Return on capital is not taxed now. Instead, it reduces your cost basis in the first tax until you sell, or until your basis hits zero. Your final breakdown shows up on Form 1099 Div every year. So let's start on the left side. ROC. When ULTY's distribution is classified as return of capital, or ROC, it is not taxed now. It reduces your cost basis each time. If your cost basis ever reaches zero, any additional ROC becomes taxable capital gains immediately. And when you sell shares, your capital gain is the sale price minus your adjusted basis. ROC is not free money, it is a tax deferral. Now, the right side, income, when ULTY's distribution is income, it is taxed in the year received as ordinary income, and that is taxed at your marginal tax rate, or a qualified income, which is taxed at 0%, 15%, or 20%. It's taxed even if you reinvest through DRIP. So even if you reinvest through DRIP, it will still be taxed. Your cost basis does not change from income alone, and if you sell shares later, capital gains are taxed at that time. Your basis hasn't been reduced by income. Bottom line, income equals tax now, ROC equals tax later by lowering your basis. So hopefully that made it a little bit easier and clearer to follow along. Let's make this with real numbers. Assume you invest $10,000 in ULTY at $5.47 per share. That's about 1,828 shares. ULTY announces a 0.09 cent per share dividend, and let's assume it's 100% ROC. You receive about $164 in dividends. Because it's ROC, your taxes period is zero. Instead, your cost basis per share drops by 9 cents from $5.47 to $5.38. If you don't drip, your total basis falls by the ROC amount. So if it was $10,000, it now drops to $9,835. If you do drip with the same cash, you buy additional shares at the current price. Your original lot's basis still goes down by the ROC. The new drip shares get their own basis equal to what you reinvested. Net effect, your total position basis sits roughly back near $10,000, but your average basis per share drops because your share count goes up. Now assume you sell later at $6. Because your basis per share dropped to $5.38, your gain per share is 62 cents. That 9 cents you didn't pay tax on today shows up later as part of your capital gain. ROC defers tax. It does not eliminate. How long until basis hits zero? If ROC stayed at 9 cents and price never changed, it would take 61 distributions to reduce a $5.47 basis to $0. After basis is zero, any additional ROC is taxable capital gain that year. Now let's flip it. In the same 9-cent dividend scenario, at 100% income, you still receive $164.53, but income is taxed now. Assume a 25% ordinary tax rate, for example, as I get taxed. That tax would be $41.13. The net cash at that point becomes $123.40. Your basis per share stays at $5.47, and if you sell later at $6, your gain per share is 52 cents because the basis did not drop. If you drip the income, you're still taxed now on the income amount. The drip shares you buy get their own basis equal to what you reinvested. With RLC, there's no tax to pay, but your basis falls, so your future gain is higher when you sell. With income, you pay taxes today, the basis stays the same, and your future gain per share is smaller. Same cash today, different timing on the tax bill. If you like a copy of the PowerPoint, it will be linked for free on Buy Me a Copy link on the description below. So hopefully this flowchart explains it and makes it a little bit easier to visualize. Okay, and a quick portfolio update. The majority of the update is the same as in the midweek, but let's break it down for anybody who didn't see. YOLTY price sits at $5.47. My shares now are sitting at 1,402. My cost basis is $8,146.72. My market value, $7,669.01. My unrealized P&L sitting at a negative 5.86% or a negative $477.71. My total dividends received lifetime are $639.58. My true gain, including dividends, now sits at $161.87, which is a positive 2.16%. My margin used now sits at $2,767.23. My Robinhood margin buffer sits around 53%, and I am being charged 27 cents in estimated daily interest. My after-tax dividend sits at $571.54, and I am estimating a tax amount due of $68.04 so far year to date. So dividends have offset a chunk of the unrealized red, which is why true gain including dividends shows positive $161, even with the paper loss. And that's why I track the true gain. My risk guardrails right now are keeping my buffer at 50% to avoid a forced sell or a margin call. I'm tracking daily interest so weekly payouts exceed it, and I will continue to drip every single week. As you can see, the weekly and monthly net dividends continue to rise up, which in my eyes just make me happy. Just remember, YOLTY's classification can change month to month. Some months may be mostly ROC and others may include income. Your 1099 div is the final word for taxes. This is not tax or financial advice. Talk to your tax pro for your situation. If this clarified ULTY taxes or YieldMax taxes, like the video, it tells YouTube to show it to more people. Download the slides, and if you want a copy of this worksheet, it will be linked below as well in the description. Comment below ROC or income and why. And if you want my weekly portfolio snapshot with the spreadsheet, the Buy Me a Copy link is down there. It keeps the energy drinks flowing while I build the tracker. And a thank you to everyone that supported me at Buy Me a Coffee. I appreciate you. This is not financial advice. ULTY YOLO out.